Ashay. I'm from Home Affordability Solutions. Our head office is in Sydney. I wanted to review a product that you may find useful if you're a little short on deposit. What I'll do is I'll just bring up our broker reference guide. You may be a broker tuning in or a client that may be looking for this solution. So effectively, we are a second mortgage lender, and how we operate is you as the customer or your customer comes up with a 2.5% deposit. You then go to the bank for the 80%, and HAS, so Home Affordability Solutions, will lend 17.5% as a base facility plus fees, and we actually capitalize your payments as well into the transaction. So how might this work for some clients you might be working with? Okay, so let's assume that you have a client that is looking to buy $1 million house, and he doesn't have the full deposit. So how this works is HAS will entertain a 2.5% deposit, or $25,000, which is 2.5% of $1 million. You then go get an $800,000 mortgage from a first mortgage lender, which is represents 80%, and $175,000 mortgage second loan from us, which is 17.5%. So what couple of things happen. You as a result of you structuring the deal this way, the client appears to have a 20% deposit, so they forego any LMI. So that's a good way of approaching a deal. Again, if they had 10% or something like that, I probably wouldn't take them down this path, but this is for clients that may not have another path. Now, what we do from the second mortgage HAS perspective is the 175, which is our base lending. We will add 3 years worth of payments. Now, our payment is $557 a month in this particular scenario. Our interest rate is only 3.25%. So that's quite a, let me just move this out of the way. It's quite a good product. This is a shared equity product. So what that means is that, yes, we will lend to your client at a cheap interest rate, but they will have to share some equity with us in future. So for example, we've been around for about 9 years. So the average loan with us is about 3.5 years, minimum term 3 years. So let's say your client is with us for 3 years, and now their property is worth 1.1 million, and you're in a position to try and refinance them out. What you would do is, of course, pay out the 800, pay our 175 plus whatever we added to it. But if it's gone up 100,000 and you borrowed, say, 17.5% from us only, you would also pay 17,500 on top of that as well. Trust that makes sense. But if you look at it from an LMI perspective, it's still way cheaper than going the LMI route. So what this figure at the bottom is relating to is the total funding line. So we would have HAS at 175 as your base facility. We'll capitalize 3 years worth of interest payments, and we do have a capitalizing fee of $9,974. This is where this figure comes from. And that, so the total loan will be $205,614, or an LVR of 20.56%. So if you have any clients that may be interested in looking at a micro deposit type loan like this, I encourage you to reach out. I'll have my link in the description where you can book in a quick chat with me, and I could see if you or your client will qualify for this type of product. Thank you.